Hope you're doing well today. It is Wednesday, December 1st, and back just to quickly walk through what we're doing with the BTX method. Again, I will be doing a monthly recap on Friday just to walk you through how everything shaped up with the trades that we were potentially taking over the course of this past month of November. What happened yesterday? Let's jump into that. We'll talk about what we're looking at today, what we're kind of expecting from the market, and then we'll let you guys get on with your trading day. Again, the purpose of these videos every day is just to show you consistency. I've been doing them for I don't know how many years now, out on Facebook and YouTube land for at least the last year and a half, showing you this process day in, day out, showing you how you can use something that's a really simple yet quantifiable way of trading and have it be profitable. I should say potentially profitable for you, because I don't know if you're going to do it or not. So it's potentially profitable because who knows if you actually take the trades. But it is showing you that you can do something that has very few moving parts, easy to follow, with the stuff that's already in your system, right? I don't get anything out of it except the joy of giving you something that you can do that help you be successful if you actually follow it, right? So let's go ahead and jump into it, and we'll talk about what's been going on. So what is going on? Well, yesterday we had news. We knew that. I said I didn't really expect too much of it. It was a very transitory volatility here, but actually during the time that Yellen and what's his face were speaking, Powell. I just totally blanked on his name. Anyway, during the time they were speaking, not much happened, but then afterwards we saw a pretty big pullback over here, pushed down in the direction of the market trend, and then it pushed on afterwards back a little bit higher. Interesting thing, what we said yesterday is coming into the market, we're looking for short trading opportunities. 4-hour bias is short, 30-minute bias is short. That's telling us that the overall bias of the market is short. Market wants to move the direction it wants to move. It's like a freight train. It doesn't turn very quickly. Freight trains only turn when the tracks turn. It doesn't reverse direction very quickly. Let's just put it that way. It has to slow down, come to a stop, and then start pushing back, right? Seldom do we see just this immediate directional change in the marketplace. It usually goes in one direction, goes flat for a day or two, maybe a little bit longer, and then starts going another direction, right? It's like that freight train slowing down, coming to a stop, and then reversing direction. We may start to see a pushback higher. Who knows? I don't know. Doesn't matter what I think or you think or anybody else thinks. We just need to do what the market tells us to do based on our trading method, right? So anyway, yesterday market looking short for us. We were looking for the market to make higher lows and higher highs. So exactly like we're seeing here, higher low, higher high, higher low, higher high, and then have it break back down in the direction of that market bias. Did that pretty consistently. You don't see any triangles over this, and that's simply because if you guys have noticed, I don't start trading until 9:30 my time, which is Central Time, 10:30 Eastern. I let the first hour of the market do whatever it needs to do, and we take action after that. I'd like to let that first part of the market, I've mentioned this before, has a lot of volatility. It kind of chops up and down. Sometimes it'll, move one direction and then, move back with the trend. It does a lot of things that I would just rather stay out of in that first hour. So anyway, so you don't see any triangles up here for me. That's because it didn't give me trading opportunity. Now, interesting thing with this is you get a day like this where you see it push higher, 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 drop back in the direction of that market trend. And then psychologically you go, well, if I had done this, I could have had this. Okay, yeah, that's true. 2020 is hindsight. It's that old saying, if ifs and buts were candies and nuts, we'd all have a Merry Christmas, right? Reality is you can't run your life on ifs, and certainly don't change your trading plan based on an if. Don't make sweeping decisions. You've got to be consistent. So consistency says, hey, this happened. I wasn't in it. No big deal. It just simply didn't fit my plan. You move on, you wait for the one that actually lines up and gives you that actual opportunity. We saw that yesterday in oil. Again, looking for short trading opportunities. 4 hours short, 30 minutes short. We want to see the market push higher, making higher lows and higher highs, pushing higher, pushing higher, pushing higher, and then break back down in the direction of our current market bias, which is short. That would allow us to trade here. I'm going to shut this door real quick because the cat wants to talk. There we go. Break back down in the direction of that current market bias. And what was I saying? Okay, so potential opportunity here. However, this is not a trade again. This is not a trade that we're going to see on our model portfolio. Well, why not, Brian? That looks like an amazing trade. It is an amazing trade. And if we were trading micro lots, we certainly could have adjusted our lot size to take advantage of this. But trading one standard lot, excuse me, one standard lot, the risk was too high. The risk on this would have been about $850, $830 actually. So that exceeds our risk parameter of $500. So, well, why didn't I adjust it down? As I've mentioned before, when we started the model portfolio for tracking the trades here, over the course of this past year, we didn't have micro lots in the crude futures. They didn't exist. So we had one standard lot to track on crude. Now, I could have changed that over, but that would have jacked everything up with the reporting over the course of the year. So sticking with it. As we get into next year, we can adjust to show different lot sizes in order to, maybe better alter your plan as you would as a trader on a daily basis. You'd alter your plan slightly to increase or decrease lot sizes in order to take advantage of the overall opportunity, right? So here we didn't have a trade on this specific instrument simply because it exceeded our risk. I mean, that would have been a $2,800 win. But again, if ifs and buts were candies and nuts, we'd all have a Merry Christmas. It doesn't matter. It doesn't matter the ifs and ifs and ifs because it didn't fit our plan, period. We move on to the next one. Don't let the psychology of that fear of missing out drive you to make changes. This plan that we've shown here, the BTX method over the course of this year, has been, potentially, I have to say potentially profitable because again, I don't know if anyone's taken the trades or not. Doesn't matter, but we have to say potentially profitable because we can't say it is profitable because again, we don't know if anyone's actually doing it. But we can see month over month over month over month over month over month, for 11 months now, we've been profitable. Obviously, there's been a month, 2 months where we weren't, had slight drawdowns, but overall profitable month after month after month after month, doing the same thing the same way every time consistently. And that's my goal here, just to show you consistent action with giving you a slight edge results in profitability if you actually freaking do it. Anyway, moving on. Gold, we didn't have a gold trade yesterday. Gold was mixed. We had a mixed bias. 4 hour was short, 30-minute was long. That gave us a mixed bias, told us don't worry about gold. All right, so now today, what are we looking at today? Same thing we were yesterday, same thing we look at every single day. We want to see the market break back into its current bias. So 4 hours short on the S&P, 30 minutes short on crude, short on gold, short. So we're looking for short trading opportunities on all of these. What that means is we'd like to see the market push higher, making higher lows and higher highs, higher lows and higher highs. And then if the market snaps back in the direction of its market bias with some momentum, breaks down below that previously closed candle, don't try to guess what's happening midstream. Let the candle close and then make your decision based on that previously closed candle. Park your order at the bottom, and if it fills it, great. If it doesn't, don't worry about it, right? And then we'll take it back short if it does break out. If the market just takes off and keeps moving higher, then so be it. We don't worry about it, right? It does its thing. So that's all we're looking at, guys. So that's it. Kind of rambled on a little bit here today, but gosh, I mean, my goal is just to show you consistently. Be consistent. I mean, we've been showing consistency for right at 11 months. It's actually been longer, but showing this, tracking it every month for you, showing you exactly what's happening in the market every single day, wins and losses and everything in between. There you have it. So anyway, keep it up, guys. Stick with it. and I'll be back tomorrow to talk about what happened today. And then, of course, on Friday, as I mentioned, we're going to do a recap and just run through the trades that we took over the course of the month and how we're looking for the year so far.